Welcome back. Simon Powell, he's the head of sustainable research at CLSA. Nice to see you once again, Simon. So it's interesting, we're talking about sustainable investing. Is that affected at all by this global stock market sell-off that we're seeing?
No, look, I think there's a real weight of money coming into the markets trying to find socially responsible and sustainable investments. You know, you just have to look at some of these global water funds in terms of their funds inflow. And they've got to spend that money on something. So there's a real support level for some of these stocks.
And what about your recommendations? Do they change in terms of in volatile times like now?
Well, no, look, I think, you know, in terms of some of the stocks that we're talking about in the water space in our new report, you know, you're talking about utilities with long-term earnings. And I think we've got real conviction here that tariffs for water are going to rise, especially in China and India. So there's some real support here for earnings. Right.
Well, you have a new client report out called Thirsty Asia.
Thirsty Asia 2. We wrote our first one back in 2007. So this is a revisit of what's happening in water in Asia.
Yeah, and it's a pretty dire situation right now, isn't it?
Well, it's reasonably dire. So three things. First of all, we think we've hit peak water. What we mean is the amount of water being withdrawn for agriculture, industry, and domestic use is really almost exceeding sustainable supplies. And so, for example, in China and India, we're seeing a lot of extraction of subterranean water, groundwater, not sustainable over the long term. As populations grow, demand for food grows, we think there'll be a shortfall. So water stress is the real issue.
And when will this situation come to a head? When will it actually hit this fragile breaking point where you just can't sustain what's happening anymore?
We think we're pretty close to that now in terms of India and China. You know, 70% of water is being used for agriculture, growing demand for food with growing populations, degradation of existing waterways through pollution means that we're kind of at that stage already. We're not saying water's going to run out. There's plenty of water going down the rivers. It's just a question of how we use it. I think the key thing we highlight in this report is how agriculture is going to need to change from traditional forms of open drainage irrigation to newer technologies.
Now, investing in water would have paid off in the last few months.
Yeah.
I was checking some of the stock picks that you talked about the last time you were here back in December. And again, some double-digit returns, some 25% gains, 10% gains. And some of the names we brought up were Beijing Enterprises, I believe, China Water Affairs, and Shanghai Industrial. So let's take stock of those three equities if we can bring up the charts. But what do you think so far? Going into the rest of this year and the next, still pretty good bets?
Well, you know, the whole China water sector looks expensive on a PE basis. You know, if you look out 2010, 2011 earnings, you know, we're over 20 times. So we're not saying that this sector is super cheap right now. But what we are saying, and what we do have conviction on, is that we think tariffs can go up 10% year on year in China for at least the next 10 years quite comfortably. So investors should put that into their model. And that kind of justifies some of the stretched valuations.
Okay, so if water tariffs go up 10% year on year, what does that mean for stocks? Is that guaranteed 10% increase, or what does that translate to?
A lot of these stocks are leveraged closely to the tariff. So, you know, a 1% increase in tariff means a 1% increase in earnings per share. The challenge for investors is, will those 10% increases come consistently? What we've seen in the past is we might see 2 or 3 years with no increase, and then the government will approve a 20% rise. So it's kind of lumpy. But I think if you take a longer-term view, a 3-year view, 3 to 4 year view, you can pretty much bet on that.
Now, the last time you were here, you said Beijing Enterprises is probably the best quality bet. Still the case?
Yeah, look, great parent backing it. Obviously, you know, tariffs in Beijing, some of the highest in China, and likely to go higher. Beijing's suffering some real water stress right now. Good pipeline of new projects. So yeah, we still like it. At the same time, though, China Water Affairs is a different play. They're invested more in the 3rd and 4th tier cities in China, where tariffs are low, so there's a headroom for those tariffs to increase as well.
Okay, so you know, investors like to hear about upside, right? And target prices. So why don't you name some numbers here?
Well, I mean, on China Water Affairs, we think the stock can easily go to 4. I think it's trading around the 350 last time I looked. You know, I think 4 is conservative. What investors probably don't know is that there is quite a bit of property in that company that's not in our NAV. So, you know, these companies, as they privatized these water concessions in China, ended up owning some industrial land. So even if you put some conservative numbers on the valuation of that land, you know, there's some upside. Now, we're not saying these companies should become property development companies. It's kind of a double-edged sword for investors because they want to invest in water and some of these companies might end up actually getting involved in property development, which can suck a bit of the sort of cash flow out of those companies. But the risk return, the risk reward looks good for China Water Affairs.
Okay, now quickly, Simon, because we have a minute left before commercial break. We talked about China a lot last time. This time you're coming in with some new areas to look at, such as Southeast Asia, like Thailand, like the Philippines.
Yeah, look, we don't cover it, but I've taken a look at Thai tap water. That looks like it's got a great tariff mechanism linked to inflation. So if inflation is rising, their tariffs will automatically go up. Pretty small stock, but one for people to look at. We still like Manila Water in the Philippines. Looks very reasonably priced. India's a difficult play. There aren't a lot of listed equities in that space, so we tend to look at Jain irrigation. Like I said, I think governments are going to restrict the use of water in agriculture. Take a look at the micro irrigation plays.